Here's a quick wrap-up of the latest Bitcoin events. As discussed in the previous episode, Bitcoin does look weak indeed. We explicitly said that unless we see some spring in the air type of action right here, but rather some gathered snailing weakness along the ascending channel support, then we're likely in for a dark night in crypto land. For ladies and gentlemen, this price action right here breeds surrender. And to those of you who follow me on AUGERE, link in the description below, please do join us. I told you in the weekly Tuesday Bitcoin video this week that a minor pump into the $42,000 area was a likely occurrence to expect. And that, ladies and gentlemen, is exactly what has happened since, to a T. As a quick guidance to these episodes, I do propose you watch them continuously as we don't stick to traditional two-dimensional TA. What we rather do on this channel is to build technical cases, and that's why we go way deeper and hold a higher accuracy and at a lower risk. In today's episode, we'll discuss the immediate dangers and opportunities alike for Bitcoin. But before commencing to the very message, some final blah blah, not financial advice, and please feed the robot with your generous likes, shares, and subscriptions. That's the sad name of the game. Let's now take a quick look at the very pros and cons at hand. Yep, this is the big one that we've been warning of for quite some time now. For anyone who follows this channel or my work on AUGERE, the emerged weakness has had a long and steady build-up. We are soon about to find out whether this here is an accumulation or if it's in fact a big nasty bear flag. Whichever it is, we're in for a serious move. For this right here, as discussed in detail in the previous episode, is nothing short of technical wrath waiting to be released. And each move here can best be likened to a pump of air. Ultimately, that pent-up pressure needs to be released. Unfortunately for the bulls, the bias of such release strongly favors the downside. This brings us to an even greater jigsaw piece, namely the Swedish OMXS30 and the American Dow Jones indices. For as Bitcoin does by no account operate on its own whims, but rather is directly subjected to the movements of the overall markets, the overall state of the markets is of pivotal importance to our Bitcoin and crypto cases. In this sense, we were given some uncannily accurate signals at the very all-time highs in both of the indices. This happened in late December, just 2 weeks after I published this episode in which I discussed the high probability of the markets now having topped out for decades to follow. This, ladies and gentlemen, is not magic. It's case-building TA at its absolute prime. What happened immediately thereafter was the effect of the markets toppling over. Yeah, water falling, if you may. And the reason why this is of particular interest to us is because this here is precisely how distributions tend to finish. In all likelihood, we'll be in for some V-shaped dead cat bounce rather soon, but that does not preclude the markets from diving further down first. Such event would of course cause Bitcoin to follow suit on the downside, upon which such dead cat bounce could very well materialize as a kiss and die of this ascending channel. On the upside, however, we could be due to such a dead cat bounce already, which smoothly brings us to the opportunities. Well, I'll keep this part brief as there's really not much to discuss here. We're mainly gonna focus on the ever so binary RSI, a properly used such that is. At the moment, Bitcoin is again retesting the ascending channel support. This is bad news on its own as its many tries so far weaken its sustainability. It takes no engineer to figure out that a constant sledgehammering on the attic floor will ultimately plunge you through it. With that said, there still might be some hope, and that hope does by all means spell a relative strength index. If we can have the RSI close at 42.2 plus minus 1% for safety margins, as in 41.8 to 42.6, then we'll have a matching strong arm case for a long position. For listen carefully, for this is where things get truly beautiful. According to our little bot so far, such signal has an average statistical return of around 225%, and that within an average of 23 days. And this is where it fits so perfectly into our technical case. For given the technical build-up here, we do anticipate a strong and aggressive move in either direction. If such move were to be on the upside, then we'll be let in on it at the absolute local bottom and at the very last point before taking off, as in no time-wasting proposition whatsoever. Such signal, which would coincide with a daily candle close at just over $40,000, would statistically amount to a daily average return of 5.25%, which, to those of you who may not be apt numerophilias, is a bloody fantastic return. Because once you start to add them up, the magic of compounded returns swiftly makes its entry. Now this right here, which coincides with the ascending channel support, is the bullish final frontier type of bull case that we can muster up, and a pretty damn good one at that. But for this to actually be in play, we need to see the daily RSI close from above in the 41.8 to 42.6 range. And not only that, it needs to hold up too, for if we were to close below it, then the opportunity has gone and below lies an infinite void of death and destruction.